Vitale, American Retirement Advisor of the Gradient Investments Weekly Talking Points for the week ending October 27th, 2023. Let's get into stocks. The U.S. stocks slid last week following disappointing quarter reports from the communications technology sector, which has expanded to over 30% of the S&P 500 benchmark. Meanwhile, continuing concerns about inflation and the resulting outlook for interest rates pressured stock valuations lower. As you see, inflation is still hanging around. It's going to. From the recent highs, both the S&P 500 and NASDAQ have corrected to a 10% decline. Last week, the S&P declined 2.52%, the NASDAQ dropped 2.62%, the Russell 2000 lost 2.6%, and international markets, where high-tech is less dominant, held up better than U.S. markets, with the developed markets, which is the EFA, down 0.76%, while the emerging markets was down 0.61%. So really in the last 2 years, markets have pretty much flattened. Really hasn't, last year was down 10 to 35%. This year was up a little bit, but still you're not even up to where we were. Let's go to fixed income. Interest rates declined slightly as we approach this week's Federal Reserve interest rate decision, one that is widely expected to hold rates steady. The 10-year Treasury benchmark interest rate declined 9 basis points for the week to 4.84%. It's hovering right about 4.9 right now. Also, next week, the Bank of Japan and the Bank of England will meet. Expectations are they will also hold their official rates steady. We should see the pause. We should hopefully, God willing, see rates start to come down next week. That will definitely help markets. So we should see. We'll see where we go with that. Let's talk about commodities. Gold, which is a precious metal and endowment series holding, continued to rise, reaching $2,002 per ounce on Friday, nearing the May high of $2,060 per ounce. Gold has been on the rise as investors sought refuge from the potential fallout of the Israeli-Hamas war that escalated in early October. It has since come down. We'll talk about that, but it's right around the 1900 mark again. Let's go to economic data. Economic growth in the last quarter accelerated to a real annualized rate of 4.9%, the fastest pace in 2 years. Surprising was a summer splurge, particularly by the affluent households, driving private consumption to 4% growth for the quarter. Inventory accumulation, usually which is a volatile section, was the second largest contributor as automakers stockpiled vehicles in anticipation of the widespread strike, which all the strikes look like finally they come to an agreement, is what I'm hearing right now. So that's good news. Get into some company news. Amazon, which is a contrarian choice, a core select, and a G33 holding, is a beneficiary of the transition to cloud-based computing and increased usage of artificial intelligence. AI is everywhere right now. Quarterly revenue and earnings were ahead of expectations, and management guided to a reacceleration in results in the coming quarters. Shares were up 2.1% for the week. You see AI as far as NVIDIA up and up. It's actually pulling back a little bit. Chevron Corp, which is a core select energy and G50 holding, agreed to buy fellow oil company Hess Corp, which is an all-stock deal valued at $60 billion when including debt, in a week which is the energy sector stock market was particularly under pressure, and shares of Chevron dropped 13.5%. How about Microsoft? Now, Microsoft is a core select holding, a G33 holding, reported revenues and earnings that did beat expectations, driven by the reaccelerated strength of Azure, their cloud computing business. Also, management provided guidance for the current quarter, which was generally above the consensus estimates. Shares for the stock rose 1% for the week. And that concludes this week's market summary. Thank you so much for being part of our ARA family. If you'd like to get a hold of us, give us a call at 855-756-5700 or get us on aradvisorsinc.com. Any questions you have, feel free to reach out. Remember, we still talk about this all the time. We want to talk about what's happening with the Roth conversions before the end of the year, taking advantage of the tax strategies. And that's it. We hope that you're having a great week. God bless you. We'll see you again next week.